Now let us look at the another type of accounts which are again related to foreign exchange only and very much part of FEMA Act, and it is meant for residents. So again I'm saying, when I say resident, again the definition of resident is as per FEMA, not as per Income Tax Act. So whoever is resident, they can have these type of bank accounts, and the popular names of these accounts are: one is the EEFC, that is the Exchange Earner Foreign Exchange, Exchange Earner Foreign Currency Account, EEFC, and second is the RFC, that is the Resident Foreign Currency Account, and there is another Resident Foreign Currency Account which is of the nature of domestic. For the short form, I am calling it as RFCD account. There may be some different name by different authorized dealers, but for the purpose of this presentation, I am calling it as RFCD account. So, as the name suggests, EFC account, the purpose is to keep the foreign exchange earned by the residents outside India with an authorized dealer in the EFC account, which is a foreign currency account, right? So this is very important, that the money which is held in EFC account is denominated in foreign currency, right? And it is a 100% foreign exchange earning only. Now this is another feature of this account, and there is no restrictions or withdrawal from this account by the residents in Indian rupees. Okay. Now here one thing I want to tell you, that the money which is kept in the foreign exchange, denominated in foreign exchange, but withdrawal is in Indian rupees. Somebody can say that what is the purpose of putting this money in foreign exchange, 100% foreign exchange denomination? The purpose is the risk factor involved with the foreign exchange. Now, if the money is in foreign exchange, the perception of the resident can be that he is saved from the foreign exchange fluctuation. So that is very important part of this. Now, there is another account which is called the RFC account, Resident Foreign Currency Account, which can be the residents can open and hold and maintain with the authorized dealer in India out of the foreign exchange which is received as a pension or any other superannuation or any other monetary benefit from the employer outside. Now look at the nature of the money which is coming into this account. It's not foreign exchange earnings of the type which is there in FCNR. It is the money which is coming in the nature of some monetary benefits, or money coming as the realization of the conversion of the assets outside India. So you sell the assets and you get the money. Received or acquired as gift or inheritance, received as the proceeds from the some insurance policies, life insurance policies, which is settled in foreign currency. Now, any kind of these transactions of these natures which are in foreign currency, it can be brought into RFC account. Now, there is another type of RFC account which is a domestic nature. A resident individual may open. I will tell you the little bit of differences between all these accounts in my later slides. So just wait for that. So I'll just explain to you that what is RFCD account. A resident individual may open, hold or maintain with an authorized dealer in India a resident foreign currency domestic account out of foreign exchange which is acquired by him from an authorized person for travel abroad and the unspent money which is related to that travel, acquired by him while on visit to any place outside India by some kind of payment or some professional services, acquired by him from any person who is a non-resident and who is on visit to India, and he has paid this money to a resident as honorarium or gift or for some kind of services rendered abroad. He might be a tourist guide. When he was abroad, he gave some services, and that person was visiting in India to whom this service was given, and he gave some money which is in foreign exchange. So he has to deposit somewhere. Acquired by him in settlement of any lawful obligation from any person who is a non-resident. Right? So some lawful obligation may be there. Okay. Maybe his brother is living outside India, and due to some consideration for division of the property, there is a lawful obligation by the non-resident brother to pay money in foreign currency to the Indian brother. So that kind of money can be part of this RFCD account. Now, if you look at the explanation, you can see here that what are the differences of the EFC account, RFC account and RFCD account. You can see here that who can open the account, exchange owner, and the individuals can open RFC account of the both types. Holding of the joint accounts, you can see here. Then the types of account which are possible. In the case of RFCD, it is written here current only, but some of the now it is up to the bank, authorized bank. They can also open savings and term deposit, while the RFC account is available in all the forms, type of accounts. And there is a difference also of the interest, as you can see here. Non-interest earning, non-interest earning, deregulated as decided by the bank. So interest may be there, may not be there in the case of RFC account. And permitted debits are there, and then there are certain permitted credits. Now the list of permitted credits is very long, so that's why I have not brought it here in this slide. So all these details you can easily download, and these can be very handy for you. So I'm not going into that depth of the FEMA Act. My purpose of today is to give you the highlights of FEMA and explain to you that what information, in what form and what structure you can get from the bona fide sources, and sometimes also from some of the sites which are there on Google. You can ask clarifications on this.